From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 12th, 2017. Today we're going to be taking a look at the AUDUSD, the Australian versus the US dollar for today's trade analysis. First things first, here on the daily time frame, we can see that this currency pair has been in a downtrend for quite a long time. We can of course recognize the downtrend with a downtrend line, the black trend line you see here on the chart, but of course we want to define the trend. Defining the trend means what's happening underneath that black trend line. Well, what we define it as is having lower highs and lower lows. In other words, the buyers have had a difficulty making a new higher high. They've had such a difficult time, it's creating lower highs within the downtrend. And so that continues to be what's happening here on the Australian dollar, and the direction then that we want to focus our energies on, because if it's not going to make a new higher high, we expect it to make a lower high. And so we're going to focus in on that for the day today. Even though since yesterday we've seen this moving higher, it's still well within the confines and the parameters of the downtrend. So we're looking for an opportunity with that. Now, of course, we want to be watchful and cognizant of the fact that we could see reversal, but I think as long as it's under the black trend line, we can't really even consider this as a point of reversal yet for the Australian dollar. Zooming in a little bit more, and you see these two areas here. I've highlighted them with the black and the blue box. The black box probably most important here. We found support at the yellow zone here and here. Yesterday was expecting a little support. Resistance. We did see it from 75.40. Let's see, today's low is the 75.19. So it went from 75.40 down to 75.19. So about a 20-21 pip bounce off of that yellow shaded area. So if you took a short into the yellow zone, you saw nearly or just above 20 pips of profit as it made its low for the day today. Now it's pushed through that yellow zone, and now we're looking at this purple shaded area as the next area for resistance. We took Fibonacci from the high down to the low, the most recent high down to the most recent low, and we find the 50% and 618 Fibonacci retracement levels sitting right here at the purple zone. So we expect that there will likely be some intraday resistance. We've already seen a little bit of it there already, but we expect that there will likely be some intraday resistance there. And really, the risk is fairly minimal. The risk is it breaks above the purple zone and continues to go higher towards the orange shaded area here. So if we're looking for an opportunity, I don't think that this is a good area to buy it underneath 75.80, 75.95. That just doesn't seem like a good area to buy it. Zooming out again all the way back to the left hand side of the chart, you can see some support into that same area. So historical support helps us identify future potential resistance, and that's what we're looking at today. Into that purple shade area, future potential resistance. We're already seeing our high today right into the 75.80 level. So we know that this is potential to be resistance. We know that if we're going to trade the direction of trend, we want the market to go up. If you're going to sell something, you always want it to go into a higher high. So I believe that this area becomes an area that we want to focus our attention on. And again, the worst case scenario is it breaks above the purple zone and continues to go to the orange zone. So we know with some accuracy that our worst case scenario risk or stop loss will be just above the purple shaded area. And then we target, of course, on the way back down, we target back to the yellow zone or maybe even the lowest low pink zone. And of course, a break of that low, remember, defining a downtrend, lower highs and lower lows defines a downtrend. Let's take it down to the 4-hour time frame, and as you can see here, nothing really new. Again, we did see the market touch 75.40, bounce down about 20 pips, came back up to 75.40, pushed through it. Now we're finding resistance into 75.80. So again, look back in time. It doesn't take too much difficulty to look back. You see right here where I put the black X underneath it, resistance into the purple zone, bounce between the purple and the yellow shaded area. Let's identify another one. Here it is right here where it found resistance under the purple zone, bounce back down to the yellow zone. So whenever it's been underneath it, there's been this potential to find resistance at the purple shaded area. So somewhere close to 75.80, 75.75 is what we're looking at as resistance today. We could target back down to the yellow zone. All of this, of course, like I said, in the direction of the longer term trend. Back under the yellow zone, of course, we'd look for it to go back down to the pink zone. Now, if you're on the other side of the fence, you say, you know what, that's crazy, let's buy it against the trend, and that's fine. Buying the yellow zone would likely be your next move. If you're looking to go long, Wait for it to dip back down to the yellow zone, 75.40, 75.55. But I think focusing our efforts in the direction of the trend is going to be the main focus today for the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.